Shuang, we saw all that data came through. It was a lot of people were kind of just looking at it and thinking, this doesn't kind of ring true. But what did you make of all the economic data, the retail sales and industrial production? They're all better than expected.
Yes, they beat the expectations.
But still, they weren't great numbers, I mean, ultimately.
No, not at all. If we look at the fourth quarter, I think actually quite sluggish activity, and that translates to a zero Q-on-Q growth. But I would say the market would quickly look past those data because the weakness was anticipated after a very abrupt exit from the COVID-0 and a surge of the COVID infections. And the market will focus more forward-looking, look at the high-frequency data, which show a rebound of activity.
Yeah, but have things bottomed, that's the thing.
Yes, that's I think, the focus. And I think the January official PMI would provide the first indication or the breadth and pace of the recovery since late December last year.
So, I mean, what happens this year? Walk us through, with the COVID just ravaging the country and the countryside there, and of course with the Lunar New Year holiday coming up, it's likely to spread even further. Do we perhaps will get something like herd immunity or something similar to that? How does that play out? And do you think the reopening story perhaps is a little bit premature?
Well, as Vice Premier Liu He said at Davos, his assessment is the first wave of infection is behind us. I think also major cities also made a similar statement. So I think the cost of very hasty relaxation appears to be fall in the year of 2022 in December. So the benefit is likely to be reaped in 2023. So currently our forecast for 2023, 5.8% GDP growth, perhaps the highest in the market. But I do not see it as a very optimistic forecast because if we look at two-year average, last year 3%, this year if it's 5.8, the average for the 2-year 4.2%, still below China's trend growth. And an interesting comparison is the average of 2020 and 2021. The average was 5.3%. So this year there is a reason to believe that the life could normalize, and the normalization itself could translate to quite high growth rate.
Well, that's the thing. People go out spending, but if they don't feel wealthy because of what's happening with the housing market, particularly in second and third tier cities, they may not spend as much. And so how important is the stability of the housing market, ensuring that up actually for the future of China here? Because it does seem as though, reading between the lines, that China has decided to back some of the high-quality developers and perhaps let the other ones just find their own way, if you will.
Yes, we actually think consumption will be the key driver for growth in 2023.
But there is a wealth effect.
Yes, indeed. And it's reasonable to be cautious because last year, if we look at the household per capita income growth, quite slow, I think, because of the overall economic condition. But the consumption growth even slower. So that created more savings. We look at the household savings deposit, it increased by nearly 18 trillion renminbi last year. Of course, the excess saving, we take out the normal increase of saving, we take out the wealth management product redemption. We think the excess saving last year could be about 5 to 6 trillion renminbi, about 4 to 5% of GDP. The question is whether people will tap that excess saving in 2023. So that depends on, first is the job and income prospect. If people are more confident about their income, about their jobs, they will reduce their precautionary saving. But a large part of that saving is involuntary, because the condition for consumption was not there.
Shuang, also very, very quickly, the structure here very quickly is changing. I mean, the population decline was really something out of left field.
Yes, that would have a long-term impact on China's economy. And I think when we forecast 2023, it's more about a rebound from a low base. But if we look at more longer term, we have to take the demographic changes into mind. So that would kind of lower China's long-term potential growth if we just look at the working age population, look at the aging population. So at least in terms of economic strategy, China will have to deal with the aging to help to improve productivity, to rely less on the population, but to the quality of the labor.